This is David Liggett with HawkPodcast number 7. And so wherever you are, we're glad you're joining us. We are excited to get to share with you some of the trends that have taken place over the last quarter in the data center and the U.S. data center market, and walk through some of the changes that have taken place. So again, if you're a data center user, provider, investor, consultant, we're thankful that you're here and listening in. So I'm going to read through some of the stuff that we've really worked from a trend perspective to uncover over the last 3 or 4 months and what's taking place currently in the space. So that's what we're going to do today, and then we'll hit some national trends, and then also talk about some of the individual data center market trends that we see in each individual market, and how those, almost from a micro perspective, are impacting the data center space. So we're excited that you're here. As a reminder, you can find us in multiple places across the internet. So not just on, if you're listening, not just on SoundCloud or iTunes or Spotify. Thank you, Rhett. But you can also see this on YouTube, as well as get snippets on LinkedIn and Instagram and Facebook and all that stuff. So we are everywhere. That's the goal, at least. But we want to make sure that you're seeing what we're doing. And if you do have comments, questions, please let us know, because we love to answer those. So again, today we're going to talk about trends in the first quarter and really current trends that are taking place in the data center industry today from a U.S. perspective. And it's a fascinating time. I tell people a lot when I started in the space back in 2007, it was really right around the time that the capital markets began to really struggle. And one of the things that took place was companies themselves really started to turn towards co-location as a I would say verified approach and a validated approach to their IT infrastructure. And then when the market settled down and they really had the capital to go do something else, they really stuck to co-location because the data center operator community had become very mature in what they were offering. C-level executives, from the CEO to the CFO to chief technology officers, chief information officers, would walk through these facilities and service offerings and say, hey, this really makes sense for what we're doing. And so we've really seen the market grow ever since, and that's what's continuing to happen. We've seen some ebbs and flows. The market has ebbed and flowed over the last, several, I would say months and years. But one of the things that has completely changed the space in the last, I would say 3 years, has been the way that hyperscale cloud service providers have leased infrastructure from the third-party operators, and then we've just seen that change the market in fascinating ways, not just in areas like Northern Virginia and Chicago, but Silicon Valley, Phoenix, Dallas, Atlanta, all those places, and even markets beyond that, Portland, Oregon, or Hillsboro, areas like Minneapolis, Seattle, Denver. We're seeing growth in Salt Lake City, Columbus, Ohio. So it's had an incredible effect on the market as a whole. We're kind of in a quiet period, I would say, right now as it relates to some of that demand. We saw a lot of that in the last year. We're somewhat in a quiet period, in 1Q 2019, but I think that will change in the second quarter. But that was certainly something that we're seeing today. I think another interesting trend across the market has been how the data center design has adjusted to meet both hyperscale and enterprise user demand. So, the way that the facilities not only are being built, but the services are being rolled out are really to meet the different, needs of data center users. And so you see that in some of the changes as it relates to how much power is being delivered per facility, how big the data hall sizes are, how the infrastructure is created, both from a redundancy standpoint, as well as just a methodology side of things. And then there's just little things here or there that relate to how data center users really want to utilize the space that they're in. And I think the data center operator community has really done a good job of listening and modifying what they're doing to meet the needs of those providers. We really we've seen development interest heat up in areas like Northern Virginia, Phoenix, Silicon Valley. All of those three areas are not only focused on right now by data center users, but also by data center operators really working to make sure that they have significant infrastructure available to both enterprise users and hyperscale requirements down the road. And those are the type of things that are pushing them to those markets. We've done a previous podcast on Phoenix somewhere in the last 30 days, and it's one where we actually talk through why data center users are finding that market to be one that they want to be in, and it's really interesting. So can we link stuff to this at the bottom? Oh, I've been told that we can link things to this, so maybe there'll be some sort of link that you can click on to go to that if you're interested. But that's been a market that's certainly been interesting and exciting in the last, I would say, 3 to 6 months, 12 months or so, as large data center operators are moving to deliver capacity in those areas. And then we've also seen really a focus on renewable energy. The data center use as a whole obviously consumes a significant amount of energy. So the way that companies that have big footprints are consuming that is important to them, and so we've seen a focus in the last, I would say, 2 to 4 years on renewable energy and how to convert the current energy sources to sometimes even 100% renewable. And you're seeing data center operators really focus on that, which obviously makes a lot of sense for the environment as well as for just corporate responsibility and corporate sustainability. So I think that's something that we'll continue to see as the market ebbs and flows over the next I would say several years. So let's hit some, what I want to do is hit kind of a high level overview on what's happening in kind of the major markets. And I want to start from west to east. Yeah, normally people go east to west. I'm going west to east. Why not? So just from a high level, if you think about Silicon Valley, that market is continuing to be dynamic. The growth that's taking place there is, really starting to happen. I would say in the last, year, we've heard a lot of data center operators are wanting to plug into that market and really grow there on a scale basis. But it's hard because of things like, permitting, environmental issues, real estate challenges. There's just barriers to entry in that market different than some others. And so, but in the last quarter, we've really seen that change. And so, I think in probably the next year, you will see some significant development opportunities or developments in that market come online. And that will allow companies that are within that market to grow the way they want to. That's really what we see in Northern California is the growth from companies that are located in that market that have significant requirements. Obviously, there are companies that have been birthed out of Silicon Valley that want to be close to their infrastructure. And so the third-party operator community, their ability to provide that has been has created a big opportunity for them, and that'll continue moving forward. But I think you'll see some even more mature facilities, different designs hitting the market in the next year, and we see that as a good thing. If you move down to Phoenix, as we just mentioned, I think the big takeaway on Phoenix right now is there's different growth clusters in that market, and you see this across the data center industry in different markets. Is that to an extent data centers will cluster together. There's some there's a reason for that from an infrastructure standpoint. There's value in being close to certain physical locations, so you'll see that. But we're really seeing some different areas develop from a data center perspective. In the last, I would say, 5 years, most of the growth in Phoenix has taken place in Chandler. And that has been a location where the data center operator community has invested in and served customers really well. We're seeing that start to grow, and so I think the takeaway today is you're seeing it on both the east and west side of Phoenix, and in both Goodyear and Goodyear on the west side, and then Mesa on the east side. There is some stuff happening in downtown, kind of towards the downtown area, and to the north. But we're really seeing the major investments come in both the east and west sides of Phoenix. So that'll be an interesting thing to see play out over the next year or so in Phoenix. When you come to Dallas, I think the story with Dallas right now is the enterprise data center market activity continuing. I think there is an increase in the amount of companies that are looking here from an enterprise perspective. We've talked about before the challenge that Dallas has had to actually land, large hyperscale requirements, and we just haven't seen that large demand hit this market. Although I think it's poised well to handle that. There's a few maybe minor challenges, but the cost is relatively inexpensive from a rent perspective. The power cost is extremely low when compared to other places across the U.S. So there's some cost components that are, that make a lot of sense for this market. I think over the next year or so, watching to see whether that big demand will come here will be a fascinating part of the market. And I do think if it does, this market's really poised. Dallas is really poised to grow in a way that some of these other markets you've seen grow. If you move up to Chicago, I think we've seen a vacancy rate increase in that market, but we've also seen that is a harder market to bring capacity online in, just because of some of the development challenges that can be there. And so there are some really interesting offerings on the market today that I think are positioned well to handle some of the demand that's taken place. The hyperscale demand there ebbs and flows a bit, and you do see enterprise users that are consistently seeking or have IT requirements in that market. So I think the combination of that will be the story over the next 12 months there. But you're seeing a lot of obviously growth in the suburbs, in areas like Elk Grove Village, in areas like Franklin Park. That's where we're seeing data center development take place and growth happen. And it's that will, I believe, be where the demand moves in the next 12 to 24 months in the Chicago area. And then if you go to Northern Virginia, Northern Virginia is a data center market like no other. I've said this before. If you're listening and you're in Northern Virginia, how interesting that market is, how much it's changed in the last, I was going to say 5 years, but I could probably say 1 year. And just it's fascinating to watch. There's I think there's 11 plus providers that are actively building inventory in areas like Ashburn, Sterling, Reston, Manassas. That doesn't mean they're delivering 1 million square feet of data center space each or anything like that. They're doing it in a very reasonable way, but there's companies that are very active in that market. It's interesting to see the way that some of the designs have changed in that market. I think you'll see that change in the next year or so as it relates to buildings being taller and more aesthetically pleasing buildings being brought to the market. Just an increase almost in development standards. I think that'll be something that you see in areas like Loudoun County and areas that are actively bringing multiple data center projects to those markets. But man, even in the midst of all the development that's going on, the vacancy rate's really low still. At Data Center Hawk, we track it below 5%. And so it's pretty impressive with, everything that's taken place there in the last 12 to 24 months. So those are some of the high level trends right now in the space. I would say the market has been truly dynamic over the last 12 months. Where it is right now, I think this year will really be led by, obviously similar to last year, those bigger IT requirements that come about. When those happen, those will change the market for the positive. We do think those will continue to happen. And the way that the markets are changing is directly in response to that. I think watching the tax incentive changes are really interesting as well. And for the areas that have it, you've certainly seen those be an advantage most of the time to the larger user. And I think we talked about this on our Atlanta podcast that we did actually a couple weeks ago. So Rhett, you can put up a link to that one. But one of the biggest ways that you can impact or change the way that an opportunity would look at a certain market is to change the incentives. And obviously that's not an easy thing to do. In fact, the people that are listening that do that are probably laughing at, just that process. It takes a lot of work, a lot of education to people on helping them understand the value that the data center investment will bring a community. And it's different. It's not the 1 million square foot office campus. It's just a different deal, but it certainly impacts for sure the tax revenue in a market. And so watching the communities really focus on attracting data center requirements from a tax perspective is, I would say, everyone should keep on their radar. And not from just a big user perspective, but also from a smaller user. And I think that's where there's significant opportunity. And not that there aren't communities that need to revamp how to attract bigger users, but I think that deal or company requirement sizes that are in the 250 kW range to 500 kW range, depending on densities, that could be between 20 cabinets and higher, or 20 cabinets and 40 cabinets and then on up. But if you're an enterprise user that has some sort of capacity in that range, there are areas that you will benefit from a tax incentive perspective, assuming that initial investment thresholds have been met by the data center operators that are in that community, and that there's credit, that you get credit under that arrangement. So that's certainly something to keep your eye on if you're in this market, and that's really what we're seeing today from a data center U.S. market standpoint. So as I mentioned, just fascinating to watch the market change. It has ebbed and flowed. We talk about it a lot, that it's a lumpy market. And so the demand can be, high in certain quarters and low in other quarters, and wouldn't necessarily believe we don't believe that's it's just how the market has worked over the last, I would say, 2 to 4 years. So if you're interested in learning more, you can get on our site at datacenterhawk.com, and there's information on each of these markets on our site. If you're want to learn more just about our content, you can get on, again, YouTube. I should have like a list of just a written list of, so YouTube, Facebook, Twitter, Instagram, LinkedIn, SoundCloud, iTunes, Spotify. How about that? Amazing. But yeah, and we love your comments. So if you have comments on, where you think the market is, questions about the space, how it will grow, please submit them and let us know either through the content platform that you're on or on our website, and we'll make sure that we tackle those in our next podcast. So wherever you are, thanks for listening, and we look forward to catching you on the next one.